Hey guys, Kill Stokes here. Welcome back to another Weekend Trading Edge video. Today I'm going to share with you one of my favorite technical setups in the market, which is the 3-bar reversal. Now, before we get started, I want to remind you guys, if you're interested in learning how to trade, make sure you check out our website, www.tier1trading.com. We have a risk-free 14-day trial membership. Risk-free means there's no auto bill, there's no sneaky, scammy stuff like that. You get on the platform for 14 days. Once your 14 days is up, you're simply booted out. Boom, bang, kabang. Now today I want to share with you two trading opportunities that are on my radar, and of course I want to update you on the DKC strategy that I've been working on since technically for the better part of like 2 years, but more intensely again from early December. But we're going to start here on the New Zealand yen. And man, we had a busy week in the market. We had some high impact news events come out towards the end of the week, which really rocked the market. And guess what? We have a week full of some more coming up. So we'll dig into that during the daily sessions and make sure you guys are aware of what to look for. But we saw some movement, and I love movement personally. I'm not a fan of trading during it, so I'm not a gambler out there trying to, catch one way or the other. And I kind of showed you the downside of that, or the ups and downside of that during the Thursday video that I put out. But I like the aftermath because movement provides opportunity. So when the market moves, it goes to levels which provide the opportunity to get involved. And you can see here on the New Zealand yen, one of these levels is a previous level of structure support. You can see back here early in 2023, price action dipped, whatever. It came down to this previous level of structure, put in a very nice rejection, got engulfed by the next candle, and came all the way back up to retest previous structure support. Now we've rallied right back down to that level, and so far we're seeing a similar type of movement with bullish buying pressure at this zone. Now, something we do want to be aware of the higher time frame is the underlapping levels of structure. If you spend any time with me in the live room, you hear me say this on almost a daily basis, but you want to be careful when there are structure levels that rest right beyond a current structure level, because sometimes the market likes to dip down there, probe it, test it before rallying back in your favored direction. So you just got to be a little bit careful with stop losses and whatnot. But this is the daily chart of New Zealand yen, and I just want to give you a bigger perspective of what's going on. As we go down to the lower time frame, the 4-hour, this is where we're going to see one of my favorite setups in the market, and it's called a 3-bar reversal. Or at least that's what I call it. That's what I was taught. In trading, there's different terms for everything, but I like to call this a 3-bar reversal. And this is a textbook example. In fact, if I were ever to redo the foundation course, I'd probably go and find this example right here and use it. But the 3-bar reversal requires three things. One, we need a high momentum candle to start things off, right? So we have a high momentum bearish candle here. It is a strong bearish candle as well, right? If you guys know about candlestick strengths, right? We measure the strength and momentum of the candles when doing our analysis and whatnot. So boom, we have one right there. We have our rejection candle right here, right? So this was a strong bearish candle. You can see the close is easily in the bottom third of the candle. We have our rejection candle right here where we have a longer tail, a longer wick on the bottom half of the candle. That means that the sellers at some point, most likely in the beginning, pushed price down to this level. They were met with buying pressure. No surprise, look left, structure leaves clues. We saw similar activity over here. And the bulls ended up winning the day, closing above the open and closing with a strong close in the upper third of this candle. We then have our next candle, which confirms the bullish momentum, right? So this starts it, right? This is the dive down in the structure. This is our first sign that, hey, there may be some buying pressure here. There may be some buyers interested. We got a nice little rejection. And again, buying pressure is not just buyers interested. It is also sellers getting out of a position. So not to get kind of too complicated for you, but here's the easiest way I can put it. Imagine yourself, and this is kind of the basics of how buying and selling pressure works in the market. Imagine if you were a seller up here, right? You're selling, you're riding this whole wave down, right? You're planning vacations and trips, you're buying your partner fancy things because you're making money, or maybe you're in debt and you're paying bills off or something like that. But at some point, you need to take profit. So if you are a seller and you need to take profit, what type of orders do you put in the market? buy orders, right? So when we see rejections like this, we often assume it's just buying. We often assume it's buyers. I call it buying pressure, right? We often assume it's buyers, and it is true. There are new buyers interested in this in this level. I am one of those buyers, but it's also previous sellers being buyers simply to get out of their position. Excuse me, and that's why I like to call it buying pressure, because it comes from both sides. But anyway, what confirms that buying pressure? I go off in these rants all the time. Excuse me for that. What confirms this buying pressure is the higher high, higher close above this rejection candle right here. And this makes up the third part of our 3-bar reversal. So 1, high momentum candle, 2, rejection, 3, higher high, higher close. And that is something that can be used as an aggressive, not the most aggressive, but an aggressive entry technique. So if you're someone looking to buy here, you may have a buy on the open. Obviously, you want to wait and see how things open up. Make sure there's no weird gaps or anything like that. If not, you can always look for your secondary reason of entry, which can be, say, something like a double bottom. So if price action comes back down here, you can look for a double bottom, confirm double bottom, and buy it up as well. So we've got structure, we've got higher time frame, confluence. If we're going through our CTS score, our combined technical scoring system, that's where we quantify our trade entries. We've got the RSI massively overbought, or excuse me, oversold as well. So we got a pretty good bunch of numbers or things lining up in the market, telling us that this is a solid place to look for a trade. Now, the tricky part here is going to be target locations, right? Because we had this really, straight directional move down. There's not a lot of ebbs and flows that tell us where would be the safest place to take targets. Again, this is a counter trend trade, right? If you look at the daily chart, we're not in any type of bullish trend or anything like that. So this is a counter trend trade. So, you want to be in and out, in my opinion. So this is where it's really going to take the skill of reading a price chart to understand where to take profits at. I can give you guys a zone right here, right? If we look at previous levels of structure and previous kind of hiccups in the market, so previous levels where price was rejected and retraced, we have a nice starting point right here. We have a nice kind of left shoulder type action over there as well, a little shelf right here as well. So I would say this is a nice zone in order to take, if you're looking for a place to take very conservative profits. You can also team that up with bringing in your Fibonacci tool, let's say a Fibonacci retracement from swing high to swing low, and looking for levels of confluence such as the 3D2 or the 50% retracement, right? I should grow this box out to kind of this shelf right here. So that area between, really, I'd say about, 82.18s right at this candle right here to about really 83 flat is a good level to look for. If you want a kind of an inner look at this doji candle, right, and to see why I chose this level, you go down to the hourly. Again, you'll see this was a little bit of a rejection as well, where on a higher time frame, it looks simply like a kind of doji candle, like it's nothing. Down here, we can see the ebbs and flows. So this actually becomes a previous level of structure support right up here below that 3D2 retracement. So nice trading opportunity. We'll see what it looks like on the open. Let's head over to the next one. The next pair we're looking at today is going to be the Aussie Canada. We've been looking at ascending triangles on here on smaller time frames and stretch this out larger time frames as well. We're coming up to a decision point, right? We're coming up to the high of our previous level of structure resistance. So far, we've held that high. What I'm looking for is a potential break of that high. I don't really have any interest in selling just because of how price has moved. But if we zoom out and look left, and perhaps I even do something like this, you're going to see the bigger picture right here of Aussie Canada. And you're going to see that our next level of structure is really this little mountainous top over here. So the question we got to ask ourselves is, where within that top are we likely to go? And we have two even handle numbers that we should pay attention to. We've got the 94 even handle right here, which rests right below kind of this level of structure right here. And then we have the 95, which is at the extreme high. Again, I think that's a little bit of a stretch, but again, that's my conservative nature. So I think if you're looking to take a very conservative approach, I would say 94 even is going to be a good place to look for a breakout. And again, we look at this on a lower time frame, our 4 hour, even our hourly. It doesn't look like a lot, but we're trading at 93.45s right now. Let's call it 93.50s, especially if we get a break and then a pullback that can easily come back down to the 93 even handle. So there can easily be 75, 100 pips of potential profit in this opportunity. So this doesn't mean that I'm entering the trade right now. Again, we don't have any confirmation of the move, but we're prepping in advance. And as traders, our job is to kind of prepare and predict. It's not necessarily to act right away. It's to prepare, it's to predict, it's to go through that IPDE process, identify, predict, decide, execute, right? Right now, we've identified what's happening in the market. We've predicted that, hey, if this happens, then it's likely to go here. We now need to decide how we're going to get involved, right? We can do that by basically knowing our trading plan. If price action breaks and closes above our previous structure high, then I look for pullback. If I get pullback, blah, 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 right? We're running through, we're rehearsing our trade in our head over and over again. That way, if it actually happens, we don't get shocked, we don't kind of freeze up or anything like that. We know exactly what we're looking for, and then we take it, and hopefully that allows us to do so without error. So again, first thing first, we need a violation of the highs. Nothing happens until that happens. If we do, I think we can go to at least 94 cent even here on the Aussie Canada. Now, lastly, I want to give you guys a little update on the DKC strategy that I've been testing. I've been giving you guys updates for the last, 4 or 5 weeks now. So if you're unfamiliar with it, just go back and watch the last Trading Edge videos. There's a little section on the YouTube channel that says Trading Edge videos or Weekend Trading Edge, whatever it says. So you can kind of separate that from the other daily videos that I put out. But completed my goal of 2 pairs this week. I want to test 2 pairs a week and hopefully start trading this thing live. April 3rd, I believe, is the date. But I want to really get down by March 1st, hopefully, or whatever that first week of March is, to the pairs I really want to focus in and then really dive into those and kind of do what I need to do before making the final decision. But I've changed the color coding a little bit just because I had a pound dollar in red and I put Aussie Canada or Aussie dollar and dollar Canada in red because there were pairs that most likely won't make the portfolio just based on their performance. But I was going through it and really the color coding red for me should mean that it doesn't work. And the honest truth is that all 3 of these pairs were profitable. They just weren't profitable to the point that I don't think they're going to garner consideration in making the final cut. But I shouldn't put them in red because I don't want to eliminate them completely. I've been doing all this talk about having your steady Freddy pairs, and when we build a portfolio, it's a balanced portfolio to create your best equity curve isn't necessarily about finding the pairs that perform the best, because some pairs may have the biggest return on investment, but they also may have the biggest drawdown to get that return on investment. And if your drawdown is too big, you're going to be in the trouble. So we need some of those pairs that maybe aren't too sexy, they don't perform too great, but they balance out the drawdowns of the pairs that do really good. So I don't automatically want to eliminate these because just because the return on investment was like, meh, because as I kind of put everything together in this gumbo pot, right? I still need to take them into account to see if they do play a role, even if it's just a balancing act of the rest of the portfolio. So got through 2 this week. Dollar Canada, blah. Aussie dollar, little disappointing as always. It's tough to put in that much work and invest that much time to have something that doesn't kind of fulfill your desires. But if you've ever done back testing, that's the process. It is a torturous process of, trying and failing and trying and failing and trying and failing, or having expectations and having them not be met over and over again. But as I tell the traders that we work with, right, all it takes is one yes. All you have to do is get something right once, and it can change your life forever. And when it comes to trading, hopefully, or testing, I should say, hopefully we're learning from all of the experiences that we're doing, whether it's learning kind of different filters, different things to add, different techniques, or whether it's just training our RAS, right? Training our ability to see the signal and see what we need to see in the chart over and over again. Because there is a massive difference between visually recognizing something, even if it's a mechanical system, right? This thing uses Keltner channels, which is, basically an indicator type of trading system, but you still have to be able to see the touches. You still have to be able to read the candlestick. So if your eyes aren't trained to do that fast enough, you're going to miss out. Because the luxury that we have in backtesting is that backtesting, we can freeze the charts. I can freeze the chart and I can go do something. I'll bring it over. I can freeze the chart and I can do something like this, and I can zoom it up and I can be like, oh, did we really test and hold? Okay, we did test and hold. I can measure it out. Oh, were we in the upper third or the lower third? Right. I have all this time to measure this out and I can do whatever I want. in real time, although I set this strategy up for me personally on the 15, which gives me time to do it, some of you guys may take this strategy and trade it on the 5. You may trade it on a 1 minute. Ugh, please don't do that. But you may trade it on a 1 minute or a range bar chart. Or maybe you have a job where you don't have time to stare at your chart for 15 minutes, but you can get back and click real quick in a minute to see if a signal fired off. You need the ability to be able to visually recognize these setups as quickly as possible, because guess what? You also have to measure out risk. You also have to measure out reward. You also have to get your stops on. You also have to get your targets placed, right? You need to know all this stuff before the trade is placed. And the lower the time frame you do that on, the more speed it requires and the more mistakes occur because of that. So there's never a waste in backtesting, even if it feels like it's a complete waste of time. Take a glass half full approach and just make sure you're taking something out of the process and understand, right, Kaizen philosophy, continuous improvement. If I can change for better 1% or by 1 degree each day over time, that's going to make a massive impact on my trading and a massive impact on yourself as well. Hope you guys enjoyed the episode. Remember, head over to www.tier1trading.com. Start your risk-free trial membership right now. Get on the platform, take some courses, chat with our community, join some live sessions, download some software with no risk attached. Also, if you haven't done so already, make sure you subscribe here to the YouTube channel. I'm uploading videos on a daily basis, whether it's clips from our live sessions, whether it's weekend trading edges, whether it's Trading Coach podcasts, or just random trading videos that I think will be beneficial to the trading community. Subscribe here on YouTube. If you're already subscribed, thank you. Make sure you hit that like button on your way out.